also be an impact on the real estate market. And our next guest says it typically closes down every election year. So for more insight, we're joined now by Pierre Debbas, managing partner at Romer Debbas. Pierre, thank you very much for joining us. So there is a definite cyclicality in your experience to the real estate market, and almost without fail, you would say people tend to slow down and hold things off before an election?
Yeah, it's a very fair statement to make. You know, every election year that we see, or the months leading up to election, we always see a slowdown in activity. And a lot of that is due to consumer confidence and the fear of what policies will the White House enact that can directly correlate with an impact on pricing of housing. And if you think about it from a consumer's perspective, they're investing in an illiquid asset where if they make that decision, that's a long-term decision. So if a candidate is elected that goes into the White House that doesn't necessarily have policies that are for pro-real estate per se, that's going to have a negative impact on their investment.
Does it affect the luxury end more and then trickle down, or is it across the board? Everyone holds off on their purchases no matter where you...
You know, I think honestly it's across the board. More so the luxury market's more driven by how the economy's doing because, you know, the need for a second home isn't a dire need. The need for a primary residence necessarily is, you know, prompted by a life event or the desire to, you know, live the American dream of buying a home. But I think definitely it impacts the market across the board.
When we talk about, when we sort of compare the two political parties, you know, there is a lot of sense on the Democrat side that they would sort of maybe push forward incentives for people to buy homes, you know, whether it's, you know, raising the mortgage deductions and providing other sort of financial incentives. Do you think that that's something that would be politically feasible? And if so, what type of impact would it have on the housing market?
You know, right now, when we had tax reform, obviously a lot of the deductions associated with housing were taken away or reduced, and we saw that have a negative impact on the market in general. If a Democrat's elected and starts providing more tax breaks that are related to housing ownership, that should in theory, you know, prompt people to own instead of rent. And that's one of the biggest concerns that we're going to have in 2020 if the, you know, Democrats take control, is that going to have a negative sentiment towards renters remaining to be renters as opposed to saving to buy a home. To give you a good statistic, the Freddie Mac stats just came out that 82% of renters favor remaining to be renters as opposed to try to buy a home.
80?
82.
Wow. In the current scenario, because it's Republicans.
Correct.
Do you think that would-be real estate transactors, sellers, buyers, in their minds leading into an election year tend to overstate the potential impact of political change and that ultimately laws regarding anything move much more slowly and incrementally than maybe they think?
Yeah, that's 100% a fair statement to make because now if you take, for instance, Bernie Sanders' proposal, Bernie's proposing nationwide rent regulation. Now, in theory, you know, that would have a very detrimental impact on the home buying market because it'll suppress rents and maintain the desire to be a renter as opposed to buying. Now, practically speaking, constitutionally, from a constitutional perspective, does the White House have the authority to do that? What gives the White House the power to regulate rents in Tempe, Arizona, and Rockville, Maryland? I mean, that will take years to iron out after a number of lawsuits where who's to say what the outcome will be? So to your point, you know, that is a very, you know, accurate statement to make that a lot of this necessarily is theoretical in a lot of ways.
We're talking a lot about the demand side. What about the supply side with either of the particular parties, whether there's a focus on affordable housing in particular, and, you know, are we going to see anything like that starting to bring to bear, incentivize people to buy, or at least be able to buy?
Well, you know, when you talk about affordable housing, that's a very key component to, I think, the social fabric of any city. In New York City, we've had a big push in affordable housing the last couple of years. But when you're talking about creating, you know, national rent regulation, the question that's coming up a lot in politics is that should owning property be for profit, quote unquote. Now, if landlords aren't going to derive a profit from owning property, who's going to want to invest in real estate? Who's going to create affordable housing? Who's going to create multifamily projects or buy them or invest in them? That's one of the biggest concerns as well.
So let's talk about the elephant in the room with regards to sort of the mid-level real estate market, and that's Fannie and Freddie, which should have been dealt with years ago. It still hasn't been dealt with, and it's possible that whoever is president in 2021 is going to have to deal with it. What's the future hold for Fannie and Freddie, and how much of an effect is that going to have on the market?
You know, I was just at the annual Freddie Mac conference in Washington, the multifamily conference, and they're talking about coming out of conservatorship in the next year or so. And what Freddie Mac has done with the multifamily market is provided a great amount of liquidity for the marketplace at low interest rates, which is been very good outcome for the real estate market nationally. When they come out of conservatorship, I don't know what will happen, to be honest. I mean, were their lending regulations more stringent now in conservatorship? Will they be more keen to, start lending more actively? I don't know.
But how important though is that? I mean, and I don't mean just from the home buyer side, but even from the investor side. And you look at the number of at least smaller investors who rely on Fannie, Freddie, or FHA loans in order to sort of facilitate these investments. I mean, at some point, whatever the solution is, it's going to look probably different than what it is now. Does that worry you just from an investment perspective?
At the moment, I wouldn't say so, because I feel like we're at a healthy point from a lending perspective with the banks. We've come out of the Dodd-Frank era where banks grappled with how to lend in that environment, and now banks are lending at a very healthy pace. Underwriting's been conservative, yet it hasn't been overly conservative like when we first saw Dodd-Frank get passed a number of years ago.
We thank you so much, Pierre Debbas, managing partner at Roma Debbas, there with us. We've got some breaking news. Of course, it's Friday. It means the rating company